Welcome back, everybody, to the deep dive. This time we're tackling Alphabet
Okay.
and their potential to reach a pretty astonishing valuation. We're talking $3 trillion,
Yep.
which, only three companies on the planet have actually hit that: Apple, Microsoft,
Nvidia.
Nvidia, that's right. So Alphabet, Google's parent company, they're sitting at like 2.3 trillion right now?
2.3.
So they're in the running, but the question is, can they actually get there? And we're basing this whole deep dive on this fascinating article from the Motley Fool. And I'm already intrigued by one of the key points they make, which is...
Well, it's interesting, right? Because when most people think of Alphabet, they think Google, they think search.
Right, right.
But this article suggests that what might actually get them to 3 trillion is something kind of different, something that at first glance you might even think works against them.
Okay, now you've really got me curious. What is this secret ingredient to a 3 with 12 zeros after it?
Artificial intelligence. Now, I bet some people are like, wait, isn't AI like the threat to Google with all the chatbots and stuff?
Yeah, that's a fair point.
And it is a challenge, absolutely. But Alphabet's not shying away from it. They're going all in on AI, but in a really clever way.
So they're not just letting themselves get disrupted. They're trying to, disrupt themselves with disruption?
Kind of. It's like they're facing the disruptor head on, but instead of getting knocked down, they're using it to become even stronger.
That is bold. So how's that actually playing out? How are they using AI to, not just stay afloat, but actually shoot for this massive valuation?
Well, they've got their own answer to ChatGPT. They call it Gemini.
Okay, heard of that.
But here's the difference. They're not just releasing a chatbot. They're building Gemini right into Google search. New features, to keep people searching even more, like taking the classic Google experience and giving it this, AI turbocharge.
Right. So meeting the challenge head on, but also sticking to what they know best, which is that whole search dominance.
Exactly. And then on top of that, there's this thing called AI overviews.
AI overviews.
Yeah, imagine search results, but it's not just text links anymore. It's images, text, links all together, way more visually engaging.
Oh, interesting.
And get this, those AI overviews, they're actually getting more people to use Google search, and they're making money just as well as traditional ads.
Wow. So it's not just a shiny new feature. It's actually performing.
Yeah, they're innovating, but they're not losing sight of the bottom line.
Okay, smart. But I'm guessing AI at Alphabet goes beyond just search.
You got it. This is where Google Cloud comes in, and this is where I think things get especially interesting.
Okay, I was going to say, we've got to talk about cloud. It's their fastest growing segment, and a lot of that is thanks to AI, right?
It is. Businesses everywhere, they need computing power for AI, to actually run these applications. And Google Cloud is stepping right up to meet that demand.
So it's more than just the computing power itself. It's also, the tools the platforms are offering on top of that?
Right. They've got things like, Gemini is a great example. Large language models, LLMs, those are kind of like the brains behind all this.
The brains behind AI chatbots.
Yeah, and tons of other tools. They're trained on mountains of data to, understand and generate human language. So Google Cloud is giving companies the building blocks to create their own AI solutions.
So instead of just selling shovels in the gold rush, they're selling, the whole mining rig pre-assembled.
Yeah, I like that. And the numbers are pretty crazy. In just 18 months, the computing power used for AI on Google Cloud, it's increased 8 times.
8 times.
That's huge. And the number of developers using Gemini doubled in 6 months. So clearly, businesses are really eager to tap into this whole AI thing, and Google Cloud is making itself the go-to place to do that.
Okay, so we've got AI boosting search. We've got Google Cloud riding this AI wave in the business world. Sounds like they've got serious momentum.
They do. But there's another layer to all of this, something maybe even more impactful than just AI growth itself. And that's where we got to look at the numbers, the valuation, the whole potential to really skyrocket here.
All right, you've hooked me completely. Let's dive into those numbers and figure out what this $3 trillion potential is all about. Okay, so numbers time. What's the story with Alphabet's valuation, and how does it actually compare to those companies that are already in that $3 trillion club?
Well, there's this key metric investors use to kind of size up a company's value, and it's called the price-to-earnings ratio.
PE ratio.
Yeah, PE ratio. Think of it like, imagine you're buying a house to rent it out, right?
Okay.
So you'd look at how much the house costs.
That's like the stock price.
Exactly.
Yeah.
And then you think about how much rent you could get every year.
That's the earnings.
Right. So the PE ratios, basically comparing those two, it tells you how much you're paying for each dollar of earnings that the company makes.
So a higher PE ratio means you're paying more for each dollar of earnings, and that usually means investors think there's going to be a lot of growth in the future.
You got it. And when you look at the $3 trillion club, their average PE ratio is almost 40, like 39.7 to be exact.
Wow, that's pretty high. So they're definitely considered like premium.
Oh, yeah, for sure. The market's pretty confident those companies are going to keep winning.
Yeah.
But here's the thing. Alphabet's PE ratio right now is 23.7.
Wait, so that's way lower than the $3 trillion club average. Does that mean like Alphabet's undervalued?
Well, that's the big question. There could be a few reasons for it. Maybe some investors are a little spooked by that whole DOJ lawsuit we talked about, even with the political stuff going on. Or maybe they're not totally convinced that AI is going to explode the way some folks are saying.
So it's like the market's giving us a bit of a discount on Alphabet because there are still some question marks hanging around. But like, what if those question marks disappear? What if the DOJ lawsuit ends with like a slap on the wrist and AI really does take off the way everyone's expecting?
Well, think about this. If Alphabet's PE ratio just matched the average of the $3 trillion club, just hit that 39.7, their value would jump to, get this, $3.8 trillion.
Well, hold on. Just by matching the average, they'd actually surpass the current $3 trillion companies.
Yep.
Okay, I'm starting to see how this could play out, but PE ratios aren't everything, right? We also got to look at earnings growth, the actual money they're making.
Absolutely. That's where earnings per share, or EPS, comes in.
EPS, yeah.
It basically tells you how profitable the company is, how much profit they make for each share of stock. And analysts are predicting a 27% jump in EPS for Alphabet over the next 2 years. It's pretty healthy, right?
Yeah, for sure. So even if their PE ratio doesn't magically jump up to match the $3 trillion club, they could still get there through good old-fashioned earnings growth. It's like two different roads leading to the same destination.
Exactly. But remember that DOJ lawsuit we talked about? That's a bit of a wild card here. Alphabet was found guilty of monopolistic practices last year, but we're still waiting on the punishment. At first, people were talking about breaking up the company, which would obviously be a huge hit to their earnings.
Yeah, a forced breakup would really shake things up, make investors nervous, hurt their valuation, the whole nine yards.
For sure. But things have changed politically since the lawsuit started. The new administration seems to be more hands-off with big tech, so maybe the punishment won't be as bad as we thought.
So instead of a breakup, maybe it's just a big fine. How would that affect their valuation?
Well, a fine would definitely sting, but it wouldn't totally change their business model or how they're growing. And some analysts even think that if it is just a fine, Alphabet's PE ratio could actually shoot up.
Really? Why is that?
Investors might feel relieved that the worst is over. They could rush back into the stock, drive up the price.
So this lawsuit, which at first seemed like a major threat, could actually end up being a good thing in a weird way.
It's definitely possible. And that's what makes all of this so interesting. We've got technology, finance, politics, all kind of swirling together to shape Alphabet's future. It's kind of like a Wall Street thriller.
Totally. With AI and billions of dollars in legal battles playing out on this massive global stage. So, with everything we've talked about, the AI, the P ratio, the DOJ situation, what do you think? Will Alphabet actually break into that $3 trillion club? So, big question time. After all this, is $3 trillion actually going to happen?
Honestly, it's tough to say for sure. They've got a lot of things going for them. The AI strategy is super smart. They're in good shape financially with that low PE ratio. And the DOJ thing might just turn out okay for them in the end.
Yeah, but any of that could change, couldn't it?
Definitely.
Like, what if everyone suddenly decides they hate how much AI is in Google search? Or, a few years down the line, a new administration comes in and really cracks down on big tech. There are just so many what ifs.
Absolutely. And that's what makes this whole thing so much bigger than just looking at the numbers. It really makes you think about the role these giant tech companies play in our lives, how much power they actually have.
It's true. I mean, we started off with a pretty simple financial question, but it's become this much bigger discussion.
Exactly. And, if Alphabet does hit $3 trillion, it's not just a win for their shareholders.
Yeah.
It says something about how dependent we are on their products, their services, on their whole view of the world even.
That's what I've found so interesting about this deep dive. It's really gotten me thinking. And I hope our listeners are feeling the same way.
Me too. So to everyone listening out there, here's something to think about. Do you think Alphabet will actually reach $3 trillion? And more importantly, what does that kind of corporate power mean for you? Is it a good thing, a bad thing, something else altogether? It's a complicated question, but it's definitely worth considering.
It is. And that's a great place to wrap up this deep dive. As always, thanks for joining us, and we'll see you next time.